New Zealand GDP data for Q1 is released this week, and speaking to me about the economy is Geoff Kendrick, Head of European FX Strategy at Nomura. Geoff, what can we expect to see from the data?
Well, the market's going for just 0.3% on the quarter. Second half of 2010, basically GDP was flat, so we had a slight negative in Q3 and then a slight positive in Q4. Assuming the earthquake impact in the latter part of Q1 wasn't too dramatic, we should get a slight positive this evening. We've already had the retail sales number, which was relatively good for Q1, so I'd expect that small positive to come through. But really, that doesn't give much of an indication as to how the medium-term economy in New Zealand is looking, given how much of an impact the second earthquake, which was sort of mid Q1, has probably had, and specifically on the South Island. Data has started to improve slightly since then, so I'm slightly more upbeat in terms of a go forward. Clearly these numbers are quite backdated now, and so really the market is starting to focus more on those more timely numbers like business confidence and other, which have been relatively positive over the last few weeks.
If figures do come in below forecast, is it likely to be blamed on the impact of the Christchurch earthquake rather than the state of the economy?
I would say so, yeah. I mean, some economists are going for a slight negative number for this evening, given how uncertain it is and how delayed this release has been. I suspect if the number was to come in below zero again, clearly that would say that in the first part of this year the economy was in a slightly worse space than people had been expecting. But I'd say now, given how outdated this number is, markets would really be saying, well, that was mostly due to the earthquake, and really what we need to be thinking about now is how business confidence and consumer confidence improves, and when that earthquake rebuild starts, and when it does start, it's supposed to be about 8% of GDP. Current expectations are around the end of this year, and it'll probably take at least 2 to 3 years, perhaps longer.
The New Zealand dollar hit a series of post-float highs, particularly against the US dollar and the pound. But new speculation about Eurozone troubles sparked a change. How long will these changes last?
Over the long term, I'm still very positive, Kiwi. Clearly the dollar has been relatively soft. You've had outside of the European news over the short term, etc. So that's no great surprise that the likes of Kiwi or Aussie have been outperforming. I'd expect over the longer term the New Zealand economy to gradually improve from here, and really it's that cross rate, which is Aussie-Kiwi, which I suspect multi-year heads lower. Kiwi dollar or even Kiwi against sterling and euro is probably slightly less important for the domestic economy in New Zealand. And what's happening in Europe, it's starting to look like, obviously the market has been thinking about Italy just now. There's a key vote on Friday this week around austerity measures. Unfortunately, that will only talk about further austerity 2 to 3 years down the track as opposed to in the near term. So it's unlikely that the market will take that as a sign that genuine austerity measures are coming through. And so as a result of that, we expect euro to remain under pressure and global risk markets more generally to remain under pressure, at least in the near term.
In the long term, how attractive does the Kiwi dollar and indeed the Aussie dollar look to investors?
Well, for me, over the next 12 months, I would say Kiwi is my top choice within the G10 to outperform. Essentially, you've got the Christchurch rebuild, which again should start around the end of 2011 and go on for a number of years. That should be very positive for growth. The RBNZ have rates at historically low levels, so really they can only go up from here. I'd be looking for a few hikes in 2012. In terms of Aussie, it's kind of stuck between both literally and figuratively a rock and a hard place. I mean, what's happening in the mining sector continues to be extremely positive. But as a result of that, the RBA have had to hike rates aggressively, and therefore the domestic economy is starting to soften. We had very soft consumer confidence numbers overnight, and that comes on the back of already very soft retail sales numbers and very soft housing numbers. So as a result, the RBA are more likely to now be on hold for a considerable period, outside of the chance of a surprise topside CPI number in a couple of weeks from now.
So that was Geoff Kendrick there talking all about the New Zealand economy. Stay tuned on Dukascopy for more interviews and stories. Goodbye for now.